I'm excited about the creation of digital money that can be used as a medium of exchange, a store of value, a unit of account. But it's not the Austrian economist definition of money. They would say Bitcoin is money or gold is money, but it's the conventional TradFi Keynesian definition of money, which is the dollars in your bank account with stable NAV and zero volatility to a fiat currency that pay a yield. That's a money market. So there's $300 trillion of credit. There's 30, 40, 50 trillion dollars in these money markets. They're all getting almost nothing. We can pay 2, 3, 4x as much. And so what do I see? I see Bitcoin as the digital transformation of capital. I see STRC as the digital transformation of credit. And I see these yield coins or other types of funds like companies like Saturn are working on is the digital transformation of money markets or digital money, and that's a multi-trillion-dollar opportunity. And so it couldn't be clearer to me that this is going to be revolutionary for the banking business, the money management business, for equity investments, for credit markets, for capital markets in general. And ultimately, if you want to grow Bitcoin, what you want to do is attract $10 trillion from the credit markets and then buy Bitcoin with it. And the way that you're going to do that is with digital credit and digital money type instruments.
How big can Bitcoin really become? Is it merely another financial asset riding a speculative wave? Or are we witnessing the emergence of the most important monetary network of the 21st century? These questions sit at the center of one of the biggest debates in global finance today. Michael Saylor believes the answer is far bigger than most people imagine. He argues Bitcoin is on a path toward becoming a $10 trillion asset and perhaps much more. But what makes his thesis so intriguing isn't just Bitcoin's price potential. It's the role Bitcoin could play in transforming the world's $300 trillion credit market. While many investors still view Bitcoin as digital gold, Saylor sees something deeper. He believes Bitcoin is beginning to unlock entirely new forms of capital, credit, and financial infrastructure. Critics argue it's still too volatile to become money. Yet institutions continue allocating billions while adoption keeps expanding. Personally, when you look at how far Bitcoin has already come, it's hard to ignore the possibility that something much larger is unfolding. And as Saylor explains why he believes Bitcoin is winning, listen carefully, because the implications may reach far beyond price alone.
I actually think Bitcoin is won. I think that Bitcoin is won economically, technically, ethically, and is being globally embraced. The only thing that's frustrating to me maybe is that it's not always perceived by mainstream TradFi investors. They don't understand it yet. Mainstream media doesn't understand it. And then there's just a lot of dysfunctional, squabbling back and forth on X or Twitter between various crypto and Bitcoin believers arguing over what I think are second and third order issues. And I think that we'd be better off in the community if we just focused upon growing the industry by a factor of 100, because generally all of the arguments in the Bitcoin community are between people that 99% agree with each other, that pick the last 1%, and then they fight over some third order issue that really won't matter to either of them in a decade. There's nothing else that threatens Bitcoin. Okay, so everything that people talked about, well, there's political risk, the government will ban it, or no one will want to buy it, or companies will never use it, or the accounting is wrong, or the tax is bad, or maybe it'll fail, or maybe it's misengineered, or, the block sizes are too small, the block sizes are too big, or it doesn't have enough smart contract functionality, right? The amount of FUD, is off the hook. And every one of those it uses too much energy. He uses computers. The Chinese will take over it. The Chinese make too much of it. The Chinese banned it. They don't make enough of it, right? There's like 20 types of FUD. They all kind of fail. So after there's nothing to worry about, we invented an imaginary problem to worry about. Imagine a computer that no one's ever built that it's not obvious we can build. Let's imagine that perhaps we make a scientific breakthrough and we manage to create a quantum computer. And let's imagine that it cracks our current cryptography. And let's imagine that no one reacts or addresses it or upgrades. Then let's imagine bad things happening. It's a hypothetical problem that people imagine so that they can generate engagement on X. The only reason it gets traction is A, there are no real problems, and B, we're in a bear market. And so normally the Bitcoin community, the crypto community at large, it's like hundreds of millions of people all they're all fans of the same team. And the price is like the scoreboard. And when the price is high, everybody's happy. And the price is low, it's like all their blood sugars crash. And it's like they lost yesterday and everybody's in a bad mood. And so in the middle of a bear market, people are in a bad mood. They want to fight about something.
Wait a minute. Are we really in a bear market? Because if you listen to much of the Bitcoin and crypto community right now, that's exactly what you're being told. The narrative is familiar. Momentum is fading. Prices are pulling back, and the market is supposedly entering the kind of prolonged downturn that historically ended with brutal 70% to 80% drawdowns. Naturally, that raises an uncomfortable question. If this truly is a bear market, how much worse can it get? But Michael Saylor sees the situation very differently. He doesn't deny that Bitcoin can experience sharp corrections. In fact, volatility remains one of the defining characteristics of the asset. What he challenges is the assumption that every cycle must play out exactly like the last one. According to Saylor, what we're witnessing may be less about a collapsing market and more about a temporary reallocation of capital. Recent months have seen trillions of dollars chasing AI infrastructure, mega-cap technology investments, and private market opportunities. Capital is being absorbed by some of the largest funding rounds and growth stories in the world. From that perspective, Bitcoin's pause may not necessarily signal weakness. It may simply reflect where liquidity is flowing right now. And that's where Saylor's thesis becomes intriguing. He argues that once this capital rotation runs its course, Bitcoin could once again become one of the most attractive destinations for global investment capital. Of course, skeptics will argue that macroeconomic uncertainty, interest rates, and risk-off sentiment could still pressure prices. That's a fair concern. But if Saylor is right, the market may be misreading a temporary detour as the end of the road. Listen carefully to his reasoning, because the distinction could make all the difference in understanding what comes next for Bitcoin.
I've been in the community, in the business, about 6 years. There have been 5 brutal drawdowns. So about once every year, there's a drawdown, some worse than others, but it's not uncommon. So I don't get disillusioned by the fact that it's volatile and we have pullbacks. It's really to be expected. What's exciting this year is you see Bitcoin has never been stronger. Like the Bitcoin identity as the world's digital capital network, the dominant digital monetary network of the world. I think that's clear. Bitcoin dominance has been growing. If you look at Bitcoin's capital or market cap compared to the market cap of all crypto assets, not including stablecoins, it probably fell to 40% in 2021. And it has been marching up toward about 68 to 70% over 5 years. So Bitcoin itself is alive and healthy. It's never been more embraced. Accounting treatments, tax treatments, banking support, institutional support is greater than ever. I think that, it's a tricky, the summer is difficult because it's the AI summer where you've got $500 billion of capital getting sucked into AI deals from Anthropic, OpenAI, SpaceX, Google, etc. And so that's creating a temporary market location. I think that when we get past those deals and we come out the back end, I think we'll see a nice rotation of capital back into Bitcoin and we'll recover. And I would think we'll recover by the end of the year. Right now, we're just kind of in the middle of a unpleasant drawdown.
New highs by the end of this year?
I think we could. I think we should definitely see a recovery by the end of the year. I don't know why I don't know if we'll get the new high within 6 months, but I would think over the next 12 months we'll make a new high.
Now, you've been accumulating Bitcoin for 6 years now with Strategy. Is there anything looking back over those 6 years that you would have done differently?
I say that the perfect digital treasury company or Bitcoin treasury company is you've just got a pile of equity capital. You know, if you've got $1 billion of equity, you buy $1 billion of Bitcoin, you have a common stock, MSTR, and then you have a preferred stock, which is like a monthly variable credit spread or variable dividend rate credit instrument like STRC or SATA, S-A-T-A. And you don't really need anything more than that, right? Because the credit instrument creates amplification for the equity. So it creates BTC yield or amplifies the Bitcoin yield for the equity in the same way that preferred stock on a bank balance sheet amplifies the dividend yield of the common stock. So the very simple structure is the common stock shareholders want more Bitcoin per share. The credit investors want over-collateralization and a dividend. The capital in the middle of the balance sheet, right, collateralizes the credit. The capital gain and the capital appreciation creates the gains they use for the credit dividend. And the equity investors get the value from the credit business. They get all the upside. And so I would say we have a more complicated capital structure today. We have 6 bonds and we have 5 preferred credit instruments. So there's 11 things, but we had to do each of them in order to get to the point where we now understand the best one. STRC trades 50 times as liquid as, you know, the other credit instruments, which are really good. And they trade better than the bonds. And so I really think the epiphany after 5 years of searching was digital credit is the killer app for a publicly traded Bitcoin treasury company.